Hello and welcome to the Accounting Buddy. In this channel, our focus is on financial accounting, auditing, and everything taxation. Now, if you're interested in these topics, do hit the subscribe button and turn on your notification bell so that you don't miss out on any future videos. So before we can look at contribution, I want us to look at how we calculate the net profit. So typically in this example, we have our sales at 20,000 less our expenses of 16,000 and a net profit of 4,000, right? Now the important part here is that our expenses include our fixed expenses and our variable expenses. So when we're calculating net profit in this way, we don't really distinguish between the fixed expenses and the variable expenses when we arrive at net profit. When we look at contribution, however, we look at it in more detail. So from the same example, we have our sales at 20,000 rands less variable cost of 6,000, which gives us a contribution of 14,000. So by definition, contribution is actually sales less variable costs, unlike net profit, which is sales less total costs. So after we've gotten our contribution, now we can less the remaining component of expenses, which is the fixed cost of 4,000, which in turn gives us a net profit of 10,000 rand. Same answer, but a more detailed presentation when it comes to the contribution. This is how you calculate the contribution. Now, there's something called a contribution ratio, right? This is very useful when it comes to also calculating margins of safety and all those other related qualifications. So now the formula is quite simple. After you calculate your contribution, this is what you use. It's contribution divided by the total sales multiplied by 100. So from our previous example, we had our contribution at 14,000, right? This is actually not right. With our contribution at 14,000, so quickly do it on the calculator here. 14,000 divided by total sales of 20,000 multiplied by 100, which gives us 70%, which gives us a contribution ratio of 70%. Now what this 70% means is that of every 1 rand that we are going to be getting from our sales, that's going to be available from our sales, is going to be used to cover our fixed costs. So 70% of a rand is 70 cents. So every 70 cents from 1 rand of sales that we're going to be getting is going to go into covering our fixed cost. So once all the fixed costs have been covered, now that 70% from every 1 rand, after that, after our fixed costs have been covered, will go into the net profit contribution. Now the 70% can contribute to our net sales profit. Guys, I hope you enjoyed the video, and I'm going to be dealing with more topics on cost financing in the coming days. So if you have any academic related problems, you want academic support, don't hesitate to contact me on my email, or you can hit me up on Twitter. Guys, please leave your comments if there's something particularly that you want to know or something that you did not really understand well, and I'm going to look into that. Guys, I hope you really enjoyed this video. Nda.